They said it couldn't be done, that XRP reaching $500 was pure fantasy, that the numbers didn't add up, that no cryptocurrency outside of Bitcoin could ever achieve such dominance. But as institutional walls crumble, legacy banking surrenders to distributed ledger technology, and Ripple's global partnerships expand at an exponential rate, the impossible is rapidly becoming reality. XRP at $500 is no longer a question of if, but when. And what's most astonishing is that the mechanism behind this meteoric rise is being dubbed by analysts, insiders, and financial revolutionaries alike as the infinite money glitch. A perfect storm of token velocity, institutional liquidity routing, cross-border utility, and automated market making that unlocks value on a scale never before imagined. It all begins with RippleNet, the enterprise-grade financial network that connects over 100 countries, countless institutions, and major global corridors. But it's the XRP ledger, the decentralized, ultra-fast, energy-efficient blockchain that powers the real-time liquidity engine quietly preparing to replace SWIFT as the dominant standard for global settlement. Now imagine every bank, every payment provider, every liquidity hub using XRP not as a speculative asset, but as a bridge currency, a real-time settlement token, with transactions occurring in fractions of seconds and for a fraction of a cent. Multiply that use case across trillions in daily volume. Suddenly, $500 per XRP no longer sounds like science fiction, it becomes inevitable. The infinite money glitch isn't about printing money. It's about unlocking trapped capital, speeding up slow corridors, and removing multi-trillion-dollar friction points across a broken, outdated financial system. Consider this. According to World Bank and IMF reports, over $155 trillion flows globally each year through correspondent banks and settlement networks that are often inefficient, delayed, and costly. XRP, by design, removes that inefficiency, becoming the real-time liquidity tool that allows money to move at the speed of the internet. And here's where things get mind-bending. As XRP becomes the liquidity layer for every major CBDC, stablecoin, and fiat on the planet, and as XRPL's native automated market maker, features go live, XRP doesn't just become more useful, it becomes more demanded as an asset to facilitate near-instant swaps, trades, and bridge conversions. At scale, the functionality alone, rolling out now, has created yield opportunities and arbitrage loops that were previously impossible in TradFi environments. This is the infinite money glitch, a self-reinforcing cycle of adoption, usage, and price appreciation where the more XRP is used, the more scarce it becomes on the open market, pushing the price up, and as the price rises, the more liquidity it can carry in fewer tokens, thereby increasing its viability to replace traditional settlement rails. And then there's tokenomics. Over 60% of XRP supply is locked in escrows, released gradually in a predictable, transparent schedule, limiting inflation and creating long-term scarcity as demand explodes. Ripple's on-demand liquidity, ODL, system is already operating in markets from Asia to Latin America, with banks like Santander, SBI, and Tranglo processing real payments using XRP behind the scenes. And now, governments are taking notice. From the US Fed's exploration of tokenized finance to Singapore's MAS regulatory greenlight, we are seeing a coordinated shift toward blockchain-based value settlement. If XRP becomes the de facto bridge for CBDC to CBDC exchange, and multiple Ripple white papers already propose exactly this, then $500 per XRP isn't just justified, it's conservative. Think about a financial world where trillions are tokenized, from treasuries and real estate to equities and derivatives, and XRP acts as the core liquidity facilitator for fractionalized global assets. The price required to carry that level of value securely, instantly, and efficiently must reflect its role. And in that world, $500 is just the opening bell. But it doesn't end there. Smart contracts and hooks are coming to the XRP ledger. With them comes a new wave of decentralized applications, automated liquidity provisioning, tokenized securities, and real-world asset settlement using XRP as the intermediary. Combine that with Ripple's latest push into stablecoin issuance. Backed by institutional-grade US dollars on the XRPL, and suddenly XRP is central not just to movement, but to value storage. BlackRock's Larry Fink once said the next phase of digital finance will be tokenized securities moving on public ledgers, and Ripple has been quietly preparing for this future since 2012, when central banks, asset managers, and Fortune 100 companies begin routing their financial plumbing through the XRPL. The price of XRP won't be based on hype. It will reflect fundamental usage and global necessity. XRP will no longer be just another altcoin. It will become the universal liquidity layer, the Internet of Values native fuel, the infrastructure powering tokenized GDP. And as trillions pour into this new asset class, early holders of XRP, those who saw the writing on the wall, who understood Ripple's long game, who held through the lawsuits, the FUD, the manipulation, those investors may witness what history will call the most explosive price appreciation in financial history. This is why analysts are calling it the infinite money glitch. Not because XRP creates wealth out of thin air, but because it unlocks previously inaccessible value, collapses inefficiencies, removes rent-seeking middlemen, and flips the financial stack upside down. And here's the final kicker. The SEC versus Ripple lawsuit, the biggest legal shadow hanging over XRP's head, is almost fully resolved, with signs pointing toward institutional clarity and ETF approval on the horizon. Once that final barrier is removed and XRP is greenlit for institutional packaging, custody, and listing on major U.S. platforms, we may witness a supply shock unlike anything seen before in crypto. And when that happens, when ETFs, mutual funds, sovereign wealth vehicles, and family offices begin scooping up XRP by the billions, not for speculation, but for functionality, the price target of $500 will no longer be considered outlandish. It will be seen as logical, even necessary. XRP is not merely a cryptocurrency. It is an engine, an infrastructure, a new financial foundation. And those who understand that now, before the world catches up, are positioned to benefit from what may go down as the greatest capital migration of our generation. The infinite money glitch has already begun. This is an urgent message about the price of XRP, a message not built on hype or headlines, but grounded in the monumental shifts happening behind the scenes in the global financial system. Because while the average investor watches the price of XRP fluctuate within a tight range, confused by sideways charts and distracted by crypto influencers chasing daily pumps, a massive wave of institutional transformation is quietly taking shape that could catapult XRP from cents to unimaginable figures in a matter of days or weeks, not years, as we stand at the edge of the largest liquidity migration in financial history, driven by real-world utility, government policy, and macroeconomic necessity, and as central banks scramble to rebuild trust in a fractured global monetary system. XRP has emerged not as a speculative token, but as a bridge, an answer to the decades-old problem of fragmented liquidity, cross-border friction, and multi-trillion-dollar inefficiencies in settlement architecture. And if you're holding XRP today, what you're really holding is a front-row seat to the reset of value itself, because Ripple's network isn't just working with banks. It's onboarding entire corridors of commerce, regulatory sandboxes, and government-backed pilot programs, many of which are already live but have not yet been priced in by the broader retail market. And this is where the urgency comes in. What happens when trillions in dormant liquidity finally flow through RippleNet and XRP Ledger as the primary bridge asset, settling trade, tokenized securities, CBDCs, and even sovereign debt in real time? With deterministic finality, what happens when the markets wake up and realize that XRP, with its scarce supply, its regulatory clarity in key jurisdictions, and its integration into institutional-grade liquidity hubs, is no longer a question of if, but how fast? That's when the price erupts not from speculation, but from necessity, and there's growing evidence that this moment is approaching far quicker than most people are prepared for. As BlackRock ramps up tokenization narratives, Nasdaq explores native listings of compliant crypto assets, and Ripple builds a global payment stack with central banks and commercial institutions at the top of the pyramid. And don't forget, Ripple has already won major legal victories, expanded in over 70 countries, and is quietly positioning XRP to act as a neutral bridge in a multipolar world where US dollar dominance is being questioned. And in this moment of economic uncertainty, when debt ceilings break records, inflation eats away at fiat value, and global tensions demand faster, cheaper, and more trustworthy value transfer,